I'm Greg Hunter. Welcome to USAWatchdog.com. With us, our next guest, he's been a bit of a regular. I love having him on. He came out early on and had a long leeway time, and he wrote this book called Trumped. Of course, I'm giving it away. It's David A. Stockman, and it's about a nation on the brink of ruin and how to bring it back. He tells me that he started this book sometime in July, and you may remember in July of 2016, everybody, but the exception of a very few people, said that Donald Trump didn't have a chance. Even up in October, remember that? Hillary was up by 12 points and all that. Well, not so. So I'm telling you this because this is a guy that's used to making big calls and getting them right. Let's bring him on. It's David Stockman. David Stockman, former White House budget director in the Reagan administration. You have a huge resume. People can find it on davidstockmanscontracorner.com. David Stockman, thanks for joining us today on USAWatchdog.com.
I'm very happy to join you again, Greg. A lot of important things to talk about. Number one, everyone was surprised by Donald Trump's election, obviously. But secondly, I think there's still not a correct diagnosis of why it happened. It wasn't his platform, and certainly it wasn't his resume. It was the fact that the financial system that we've had for the last 30 years is failing. It's been great for the bicoastal elites, the term I use in my book, but it's been terrible for flyover America. And if you look at the cover of that book, you see all that area in between the coasts. It's dotted. If you had an election map, I put this out before the election, obviously, but if you had a map of the counties that went red on election night, it would be most of that white area. So I think what we're dealing with now is fundamental questions about a government that's out of control, a Fed that's printed money endlessly, that has basically stayed in the canyons of Wall Street. It really hasn't helped Main Street America. Real incomes, as I point out in the book, are down 15 or 20% for the average family. Today, it's been the 1% that has gotten the great windfall. Beyond that, we have a foreign policy that's out of control. We're intervening everywhere. We've spent trillions. We've destroyed half of the Middle East and pieces even further in the distance than before we started all this. So what I think is that we're at a inflection point. There has been a fundamental break in terms of the public's support for, and I guess I should say acquiescence to, the Wall Street-Washington axis that has run both domestic and foreign policy for the last 30 years. Where this leads, I think, is the huge question before us, because it's not clear to me that the ruling elites are going to allow Donald Trump to govern, or that once this plan that he's talked about in very vague and general terms to cut taxes and regulations and all that good stuff, once that gets to Capitol Hill, what happens to it? I think we're likely to have more of a fiscal bloodbath than a fiscal stimulus, because unfortunately for Donald Trump, not only did the public vote, the establishment out, but that left on his doorstep the inheritance of 30 years of debt buildup and of a fiscal policy that's been really reckless and profligate in the extreme. So even though people would like to think he's the second coming of Ronald Reagan and we're going to have morning in America, unfortunately, I don't think it looks that promising, because he's inheriting a mess that pales into insignificance what we had to deal with in January 1981 when I joined the Reagan White House as budget director.
And I'm glad you painted that backdrop, and yet we're having that backdrop, I should say, and yet we're having record all-time high after record all-time high in every index: the Russell, the S&P, the Nasdaq, the Dow, and you and Richard Fisher, former Dallas Fed president, are a little bit at odds at what caused all this. He said, and I quote, "We injected the system with cocaine and heroin. You just simply call it opium." So So evidently you two are kind of on the same page, but a little bit different on the drug. How long can this go on for? I mean, everybody is thinking that the whole economy is going to turn around and shoot up like a rocket. Is that what you think?
I don't think there's a snowball's chance in the hot place that that's going to happen. This is delusional. This is the greatest suckers rally of all time. It is based on pure hopium and not any analysis at all as to what it will take to push through a big tax cut and in what form it will materialize and the fiscal context in which it's happening. Let me summarize quickly. When Reagan stepped in, there was only $930 billion of national debt. It'd taken 190 years to get there, 39 presidents. It was only 30% of GDP, so there was a lot of room for big tax cuts, a defense boom, and everything else. We didn't intend that to happen. Reagan really did want to balance the budget, but he lost control of the politics. The tax cut ended up double the size that we intended. The defense buildup got out of control. And my point is there was enough running room on the balance sheet of the United States that he could create inadvertently massive deficits over his 8 years. He added 1.8 trillion to the national debt, or double what all of his predecessors had done in the previous 2 centuries. It did cause a temporary boom in the economy, but we now live with the legacy of that kind of free lunch fiscal policy even today, because after that, it was a 2-party competition to see who could cut taxes more or increase spending more or pretend, as Dick Cheney once said, deficits don't matter. Now, the reason this is important is that Donald Trump is inheriting the whole mess. He's in a trap. Today, the debt is 20 trillion. It's 106% of GDP. Unlike in Reagan's time, when I first got out the pencil and paper and the projections, we were looking at a budget surplus by the mid-1980s. So there was room for some of this, fiscal excess. Today, Trump, whether he knows it or not, and I don't think he's really paid nearly enough attention to the fundamentals of the budget, he's inheriting a built-in deficit of $10 trillion over the next decade under current policies that are built in. And yet he wants more defense spending, not less. He wants a drastic sweeping tax cuts, both corporate and individual. He wants to spend more money on border security and law enforcement. He's going to do more for the veterans. He wants this big infrastructure, $1 trillion infrastructure program. When you put all that together, it's madness. It doesn't even begin to add up, and it won't happen when you're struggling with the 20 trillion or the 10 trillion of debt that's coming down the pike and the 20 trillion that's already on the books. And so what I think people are missing is a big date that I tell everyone to keep in mind. March 15th, 2017. That's the day that this debt ceiling holiday that Obama and Boehner kind of put together right before the last election in October 2015, that holiday expires. The debt ceiling will freeze in at 20 trillion. It will then be law. It'll be a hard stop. The Treasury will have 200 billion roughly of cash. We're burning cash at a 75 billion a month rate. By summer, they'll be out of cash. We'll be in the mother of all debt ceiling crises. Everything will grind to a halt. I think we'll have a government shutdown. There will be no Obamacare repeal and replace. There will be no tax cut. There will be no infrastructure stimulus. There will be just one giant fiscal bloodbath over a debt ceiling that has to be increased, and no one wants to vote for it. Now, when the market begins to understand that that is what's coming down the pike and not this nirvana of, the second coming of Ronald Reagan, I think the bullish optimism, which is utterly unfounded at the moment, will dissipate very quickly. And then, and here's the second point, they are going to raise interest rates on March 15th. They have to. I'm talking about the Fed. They've dithered for 100 months. This is totally ridiculous. So you're going to be in an environment in which there is no more stimulus coming from the money printers at the Fed, and in which the vaunted Trump fiscal stimulus, or handoff of the fiscal baton or of the stimulus baton to the fiscal side, will clearly not be happening. And then, as I say, the markets will discover, and I don't even think they're markets anymore, it's just a casino where a lot of gamblers show up. The casino will discover that it's home alone. Washington isn't there for one more, go around of this fantasy. And then the rubber will meet the road, as they say. The day of reckoning will happen. I expect the market will easily correct by 20% and probably a lot more. And I think it's going to begin, as I say, March 15, when it becomes clear exactly where we are, and not in this fantasy that is being lived every day in the casino.
Okay, I'm so glad you brought this up, because I'm watching this TV, like Working Girl, Melanie Griffith's character, and I'm watching his 1980s. He vaults up to success. He's famous. He's Trump this. He's Trump that. He's a brand. He's too big to fail. 90s, pow! He goes to the bankers and said, "Woo, you can't let me go down the original." He doesn't say this. The original too big to fail. Is Trump going to hit the default button, end the full faith and credit of the American government when everybody starts trying to sell these treasuries when they raise rates? I mean, we're talking about, sell, 16, 18 trillion held outside, liquid dollar assets held outside the countries. Is he going to try to liquidate that bond mess? Is he going to default? Is he going to say, we're done with the full faith and credit? You guys, that's it.
Yeah.
What's he gonna do? I mean, what you're painting is ugly.
Yeah.
Ugg and Lee getting together for a party. What's he gonna do when he says, "Oh, no more money, we're gonna default"? Do you think he's gonna do that?
Well, I think there are going to be coronaries, but it will likely not be in the bond pits, but on Capitol Hill. And what I mean is that when they run out of cash, it is true, Donald Trump is one pretty rough and tough hombre. I'll give him credit for that. He is one negotiator like the world has seldom seen. Some people think, he's pretty reckless when push comes to shove. But he is not going to roll over and agree to whatever Capitol Hill demands in order to get a debt ceiling increase. He's going to face them down. And I have great regard for Mick Mulvaney, the new budget director, who was just confirmed a couple of days ago, who has clearly understood that when the Treasury runs out of cash and the debt ceiling has been used up and you can't borrow anymore, the president has authority to allocate spending. And so therefore...
Oh my God!
Yes.
So he can do it. That's like a line item veto. But,
yes.
but live. But
yes.
live.
Yes.
Oh my gosh.
And so the point that I'm trying to make here is that we have, on a typical month, 250 to 300 billion of revenue coming in. That will easily cover the debt service per month. That will readily cover Social Security and other critical payments. But when it comes to paying grants to state and local governments, or contractors for the Army Corps of Engineers or the Pentagon, or a whole range of other activities, if you don't have the cash, you put the bills in the drawer. And I think that is what's going to shock the system, and it will scare the living bejesus out of Wall Street and the financial markets, because then you won't have a sudden clarification and resolution of the problem. It could go on for days and weeks. In the past, since no president has been advised to allocate spending, it comes to a inflection point. Somebody blinks. They pass a resolution in the wee hours of the night, and the government goes on its merry way, spending and borrowing against a new ceiling. This time, this summer, there is going to be day after day of uncertainty as to who's going to blink, what the deal is, who's getting paid, who isn't, what bills are built up in, building up in the drawers, and which ones aren't. This is going to be, a maelstrom, if I can use that word, like we've never seen before. And the markets are not even remotely prepared for this. As people have said, fundamentals don't matter anymore. Nothing is being discounted. It's all machines, raging robo machines and day traders thinking that somebody is going to come to their rescue no matter how absurd the bubble gets or how extended the whole system becomes. After all, right now the S&P 500 is trading at 26 times earnings, and earnings have been going down for the last 6 or 7 quarters. There is no big booming recovery coming, and that's another big thing, that I think is important to compare with what we had in the early 80s. In the first year and a half, we got through the liquidation of the inflation mess that had built up, and we started with a new business cycle. This one is 94 months old, I believe, right now, and no one's outlawed the business cycle. So there is going to be a recession, and there's going to be no stimulus baton left to bail it out. And I think that's the new fact that neither Trump nor the Wall Street gamblers really even remotely understand.
Is this why Trump was coming on? He's been on recently saying, we're going to deal with the federal debt. We're going to deal with this debt. And that has just gone right over the heads of Wall Street, the business channels, the mainstream press. And I'm thinking, but he's got a plan, and he's got Mulvaney, and evidently Mulvaney and him are on the same page. Surely he's told him some of the things you told him. So in other words, he's going to say, Mr. President, you're going to be allocating the money, just you. And so is that what he means about this debt, this allocated?
I'm not sure what he means. Donald Trump kind of jumps from one tweet and soundbite and issue to the next. As much as I supported him, actually, I voted for him because I wanted change. But I see him as the great disruptor. I don't see him as someone who's going to bring about a solution. We have to have the system blow up first for all practical purposes.
And and you think he'll be supervising that blow up. I couldn't be a better person. We wouldn't want Obama to do it, or Hillary. You wouldn't want Hillary to supervise a blow up.
Yeah, he'll be superintending the blow up. There's no doubt about that. I think he does not yet understand the magnitude of the problem, the intractability of what he's inheriting. He's been going around talking to CEOs of defense contractors and saying, well, let's renegotiate the F-35 and I'm going to save $600 million. They're all selling him a used car. This stuff isn't real. It's things that were in the pipeline already, or it's accounting razzmatazz. So he doesn't realize that this problem he's inheriting is 1,000 times greater than anything he ever imagined. This is a monster. He doesn't want to cut Social Security. That's $1 trillion a year, not even for the wealthy punters who live on his golf courses. He hasn't thought that through. He's telling the retired population, we're not going to touch Medicare. That's $600 billion a year. You can't do that. He says to the veterans, we're not doing enough for you. I sympathize with the veterans, but we're spending $185 billion a year already. Now, what does he propose to cut? Well, I read the other day they're going to get rid of the National Endowment for the Arts and Humanities. I say, hooray for you. I tried that in 1981. I got it cut for 1 year. year. I got my head handed to me thereafter, and it's still here. The point, though, is if you got rid of both of those agencies and let the rich people of this country fund the arts, which they clearly can do, it would save, and get this, 1 hour of federal spending per year. In other words, we spend $400 million an hour, and the combined budget of these two agencies that he's mentioned he wants to get rid of wouldn't even add up to an hour. So he's going to be in for a pretty heavy-duty, harsh education as he gets into the budget in the next few weeks. And what I think is going to happen is, government isn't conducted, in some soundproof, site-proof, hidden chamber. Everything leaks, and we're learning in the Trump administration, they're as leak-prone as any I've seen since 1970 when I first came to Washington. So it's all going to leak out. And the stock market and the casino is going to begin to realize, piece together the fact that there is no plan, there is no big fiscal stimulus. The whole system is, heading into some kind of crash landing, and that's going to change the kind of manic delusions that are underway today.
Are you talking about a greater depression, the greatest depression?
I think we're going to have a greater depression in the stock market than we've had since 1987, when it dropped 25% in one day at the beginning of this whole Greenspan era of what I call bubble finance. But I think what's out of kilter today is far more the financial economy than the Main Street economy. And so the big correction that I'm talking about is in, the 62 trillion of debt outstanding in the country, the 30 or 35 trillion of stock market value in the various indices, and counting all 5,000 or 6,000 publicly traded stocks, however many they are. The big adjustment and crunch is going to come there. Now, it will spill over into the real economy, but one of the silver linings of this phony recovery that we've had since the crisis of 2008 is that Main Street really hasn't recovered. So there isn't a big bubble there of jobs and production and income and living standard elevation or growth that's going to be taken away. They never did recover. The only strong recovery that we've had is in the financial markets, and that's where the next big greater depression, as you call it, is really going to happen.
And last question, and Greenspan is out. You mentioned Greenspan. He's out saying that, Ron Paul was right about gold, and we need a gold standard more than ever. Other big financiers are buying gold. Is this why gold is looking like it's building a pretty steady floor and maybe going up from here, that they're freaking out that this big bloodbath that you talk about is going to happen?
Well, I think I don't think it's due to Greenspan. I think it's due to the fact that there is some semblance of rationality left around the edges and the corners of the financial markets, and some people realize that the central banks are out of dry powder. That era of massive money printing is over. They can see that the governments of the world, Japan's, ours, the EU, and China for that matter, are all close to bankrupt. And in that environment, there's going to be a massive reset of financial asset values, and the central banks are going to be totally discredited. After all, they said, we know what we're doing. This is extraordinary policy, and yes, interest rates have been close to zero for almost 100 months now, but it'll all work out in the end. Well, it's not. It's going to end in a crash landing, and when people realize that the central banks have failed completely, that the whole theory of QE and ZERP and all the rest of it was phony baloney, then I think there will be a dash for the only solid monetary asset that's left in the world, which is gold. And remember, when you take the size of the global financial markets, which I put at about 300 trillion, between all the debt outstanding and the combined value of all the stock markets in the world, the gold market is tiny compared to the size of the financial system. And it only will take a small shift on the margin into the asset of last resort to make the price of gold really start to soar. I think that's going to happen. I don't know when. The best thing to do is be patient and be long gold, and it will pay off handsomely, I think, when the crisis really intensifies and hits ground zero.
David Stockman, I want to hold your book up again. It's out. It's just a wonderful. I got one of the bindered book, one of the draft copies. Thank you very much. Trumped, and the cover, and it's again the nation on the brink of ruin and how to bring it back. He lays it out here. This is huge, folks. I mean, this is really huge. Graphs, charts. The David Stockman, a brilliant mind, a really brilliant mind, and you gave us just a snippet of it. Go buy the book. Trumped, the nation on the brink of ruin and how to bring it back. David Stockman, thank you so much for joining us on USAWatchdog.com.
Very good. Be with you again, Greg.
Yes, sir. Oh, and your website is at davidstockmanscontracorner.com. You put out articles and things like that all the time. Thank you again for joining us today on USAWatchdog.com.
Very good.